Marvin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening trades on the session today. We'll also be joined by an expert who will help us navigate through the opening trading action, help us with the strategies on the markets, as well as several stocks that will be reacting to news is something that we will be looking at. A quick look at what the trade setup is like. We are already about to hit the pre-opening levels. Remember, it's the importance of the date as well. It's Thursday and it is the 29th of February. That is the leap year day as well. Now, next time an expiry, and that to a Thursday will happen on February 29, would perhaps be 28 years later. So which is why there is a exclusivity to the date that we are at as well. Now, as far as the setup is concerned, remember yesterday, about the first 90 minutes of trade yesterday, the Nifty continued to remain in the snooze mode, as it had been through most of the week that started off on almost last Friday as well. But post 11 a.m., it turned out to be a one-way fall into the markets. Every minor recovery was sold into. Near-term supports were breaking, as were the psychologically supported levels as well on the downside. The Nifty also ended near the day's low, and no sectoral index was spared over there. The Nifty IT, which was holding on to some sort of gains, courtesy Infosys and TCS, also sold off. All the sectoral indices did end lower in trade. Now, with the Nifty falling the most in a month to the lowest level in 2 weeks, it's obvious that the index heavyweights have a big part to play. So RIL, ICICI Bank, HDFC Bank, they all took the Nifty about 300 points lower, below the intraday high of 22,229. The big question is what is next for the Nifty, especially it is the expiry day. So what will it take for the Nifty to really navigate through all the volatile moves that will pan out today? Yesterday, India VIX also rose about 3% to close above the levels of 16.3. This also will need to be watched out for. The market will also be anticipating some solace from the GDP numbers that will be reported today evening as well. Of course, apart from the Nifty, we also saw a deep correction coming in on the Nifty Bank as well. The global setup, what does that look like? US stocks closed slightly lower on Wednesday, a day ahead of the key inflation reading that could heavily influence expectations of the timings of the interest rate cut by the Federal Reserve. Asian markets were trading lower on the early morning trade as well, as they were awaiting the US personal consumption expenditures price index data as well. And of course, the GIFT Nifty indicated slight positive trade for the trade today as well. So we do have the levels on the Nifty right now. And you do see that the Nifty is opening just about 12 points higher. 21,952 odd levels is what you see the Nifty opening at in the pre-opening levels today. A whole host of stocks will be discussed, strategies as well. So let's welcome on the show our guest, Soni Patnaik, who's with us. She's the AVP of Derivatives Research at JM Financial. Soni, very good morning to you. Thanks a lot for taking the time out for this discussion. A whole host of data points, news flows to track for today. But let's start off with the expiry session and the strategies on the Nifty and the Nifty Bank. How would you really look at yesterday's fall? Will it further move the index downwards today, or will the news flow of Reliance-Disney perhaps lend some support?
Hi, good morning, Sakshi, and to all the viewers. Of course, we've seen some sort of correction yesterday, on both the indices. But it is important to understand, that yesterday and today are two of the main days where the rollovers take place, and the rollovers are taking place on a longer side. There's a bet on the bullish side from Feb to March series, and perhaps a lower base that we can see in Nifty and Bank Nifty at a correction point of view may help the rollovers actually to happen. The bets can be on a longer side, and you'll have a lot of space to move in the March series. Important to understand is, as per today's expiry, the maximum option pain for Nifty is at 22,200. So that's quite a lot of gap for Nifty. For Bank Nifty as well, the maximum option pain as per the options matrix is 47,000. What we can understand is where the support can be for Nifty and Bank Nifty right now. For Nifty, crucial support still stands at 21,900. If the weekly closing and today's expiry happens below the level, there could be a cautious stance that one may take going into the March futures, March expiry. However, if the expiry can take place above 22,050 to 22,100, that range, then there could be some relief, and we can expect this range to continue for quite some time. That is the range of 21,900 to 22,200, 250 on the higher side. So it is very important to watch out how the expiry happens today, at what level, and how the rollovers stand out from the here onwards. If we just look at a broader picture, FI's outlook has not changed at all for Nifty and Bank Nifty. Their long position is still at 45%. The entire of Feb series, they've been maintaining above 30%, and they've just been rising slowly. So I think this is very important to watch out for this particular level of 45% longs. This could be a trend reversal. If it's able to sustain, for today's expiry, then from 45%, we can also see it going and testing to 66% longs to 72% longs as well, which will indicate a bullish start for the March series. So I think a lot of data to watch out for, and let's just see how the expiry happens and how the rollover data confirms the further trend.
Absolutely, Sony. So that's as far as this big strategy is concerned for today as well. But let's slowly and gradually come down to several stocks that are already reacting to news flow, starting with Reliance Industries, Network 18, TV 18. These are all reacting to the big news flow today that Reliance Industries has now entered into a joint venture for entertainment brands in India with Disney. It is going to be investing 11,500 crores in the joint venture with Disney for growth strategy. So this RIL Disney JV will combine businesses of Viacom 18 and Star India. Viacom 18 will be merged into Star India as part of the transaction. The transaction values the JV at 70,352 crores. The JV will be controlled by RIL, who will hold 16.3% stake, Viacom to hold 46.8% stake, Disney to hold 36.8% stake. Neeta Ambani will be the chairperson of the JV, while Uday Shankar will be the vice chairperson. Now, the JV will have exclusive rights to distribute Disney films productions in India, and the transaction is likely to be completed between October 2024 and March 2025. How do you view this for Reliance Industries per se? Sony, because we've also seen that Jefferies has come out with a report on Reliance Industries after this news flow. And what Jefferies has said in their report is that there is a potential combination that will support most lucrative cricketing rights in India, which has a 40% share of the advertisements. This opens up avenues for better ad inventory monetization, content cost reduction, and the transaction adds 40 rupees per share to RIL's SOTP. This is what Jefferies has also mentioned. We are looking at a pre-opening trade of a level of 29.30 on Reliance Industries, 0.6% of an upside. This news was long awaited. Finally, it's coming to fore. How would you look at Reliance Industries?
See, Sakshi, looking at Reliance, even in yesterday's fall, it held on to the levels of 2,900, which is a very important support. Now, there's a broader consolidation for Reliance between 2,900 to 3,000, and the whole of the Feb series, we've seen it, almost consolidating in this particular range. So today is also quite important. Now, if further Reliance does not break 2,900, it can definitely bounce back, and gradually it may try to test 3,000, take out those resistance levels. If you look at a medium to long term, sort of outlook for Reliance, then it is quite bullish. I think there are multiple support levels on a medium term basis, especially at 2,850. I think as long as 2,850, 2,840 level is getting held and defended in the medium term, Reliance can bounce back towards 3,100, 3,150 as well. So I think Reliance is a very much buy on dips. The structure is quite strong on a medium term basis, and one should continue to accumulate on dips, and just wait for the higher levels to come.
Okay. So the markets, meanwhile, are looking to be in a sell-off kind of a trajectory. From the opening ticks on the higher side, you can now see a 16-point dip on the Nifty, 21,935. The Sensex down by 84 odd points as well. So there is a slight slip that's happening. So we'll continue to watch out for. Initial trades only indicate some kind of volatility that's taking place. Let's look at HDFC Bank as well. The stock is in focus because of a large trade worth 34 crores seems to have taken place in the pre-opening space. 0.5% of a decline can be seen on HDFC Bank. About 2.44 lakh shares have exchanged hands in the pre-opening space. How would you look at HDFC Bank, Sony?
I think HDFC Bank has done, it's done away with its correction, I feel. And, 1400, 1380 levels are quite strong as of now. So I think it should respect those downside level support levels in any sort of intraday dip that we can see, as long as the closing stands above 1400. It can definitely be good if it's closing above 1400 on the expiry basis level. From here, we should see a slow, gradual rise in March series. It can test 1460, 1480 levels as well. So I think as just keep a stop loss of 1380 in case anybody is holding, and just wait for these targets of 1460, 1480 to come.
Okay, let's talk about the other big news that we are tracking today, and that is as far as the Nifty rejig and the Nifty Next 50 rejig is taken place. So Shriram Finance, UPL, Geo Financial Services, PFC, REC, Adani Power, IRFC, these are the stocks that are in focus amidst this rejig. Now, National Stock Exchange has announced that Shriram Finance will join the Nifty 50. It will replace UPL effective March 28th. Geo Financial Services will also be added to Nifty Next 50. Analysts are expecting an inflow of about $200 million to Shriram, an outflow of about $100 million from UPL as a result of this shuffling. Along with the Geo Financial Services, we are also looking at Adani Power, IRFC, Power Finance Corporation, and REC. That will also be into the Nifty Next 50 stocks list, and therefore keep an eye out on all of these stocks as they are reacting. So Geo Financial Services is reacting positively right now. Shriram Finance is something that you need to keep an eye on. UPL is reacting on the downside. Sony, how would you look at a basket of stocks that are under rejig now?
So if we talk about Geo Finance, then of course the structure is quite strong and it holds a good level of buy on dip sort of a structure. I think one can just continue to look at the stock can definitely do well. There are multiple support. It has given very strong breakout above 290. So, as long as any dip you can see around these support levels, one can initiate the longs from those levels. And, it can bounce back towards 330, 340 odd levels. This is quite good. Just talking about Shriram Finance, particularly because of the news and how the impact it has been, I think day before yesterday, we'd seen it make a dip around 20 to 90. Now it has risen from those levels, which is your 50 EMA. I think that's quite important to note that further, if it's not breaking these levels, it can bounce back above 2500, 2600 also can be seen at a positional basis. So I think both these stocks are looking quite strong on a buy and dip sort of a level.
Okay, fair enough. So that's the strategy coming in on Shriram Finance right there. Sony, 2 minutes to go before the markets hit open. Share with us your top 2 stock ideas that you'll be tracking for today.
So first would be PVR Inox. So PVR Inox, we have seen, test multiple support of 1340, 1350 in the range. Now, I believe that, maybe this is a time where it has actually bottomed out and it can definitely bounce back from these levels. March series 1400 put has seen aggressive open interest addition. So it was indicating that, it can at least rise up to 1400, 1420 odd levels from current level. I think risk reward ratio is quite favorable. So one can just keep a stop loss of 1340 and look forward to testing 1420. If standing above 1420, you can see a further rise up to 1440, 1460 levels. So that would be the first stock. The second stock would be Samvardhan Motherson. The stock has given a good breakout yesterday and is looking quite strong. Also, there was good buying, long built up positions, and very strong volume action as well. I think it's holding a very strong support of 116.8. So I think keeping a stop loss of 116.8, one can enter Samvardhan Motherson, and the target of 122, 124.
Okay, so PVR Inox and Samvardhan Motherson, both of these stocks will be tracking through the course of the trading session today. They have been suggested by Sony. And remember, this is the second vote of confidence for both these stocks. Just yesterday, we had Ruchit from Angel One who talked about these two stocks as well as among his top stock ideas for today. So you have the second vote of confidence coming in on PVR Inox and Samvardhan Motherson. Keep an eye out on both these stocks right now. PVR Inox is also already looking in the positive zone today. However, slight dip coming in on Samvardhan Motherson and the pre-opening trade right now. We're just about waiting to see the markets hit open, and we will be telling you the kind of opening that we are looking at already. We've been seeing slight dips coming in on the Nifty Bank, and on the Sensex when it comes to the pre-opening trade. So you already have the levels now, about 0.1% of a decline, 21,923 for the Nifty right now. The Nifty Bank seems to be under pressure again. There is a 0.2% decline, 45,852 as the level on the Nifty Bank as well. Let's look at stocks. Let's look at Reliance Industries, how that has reacted to the news of JV with Disney. Let's look at that stock. And of course, look at TV broadcast and Network 18 along with it. 0.8% of an uptick on Reliance Industries, 29.35 for you. That's the one that is seeing uptick. Along with it, if you look at, TV 18 and Network 18, both of them are looking in the positive zone. Let's look at Shriram Finance and let's look at UPL, the two major rejects that have happened in the Nifty reject per se. So slight upticks again coming in on TV 18 again as a follow-up on that news flow. Shriram Finance, 3% higher, 24.20. That's the level at which Shriram Finance is trading at, about 71 rupees of an upside amid the news flow. UPL, let's look at that one. So that has dragged. Of course, that was expected. 0.6% of a decline on that one. Let's look at several other sectors. Let's look at mid caps, 0.3% lower. Remember, Nifty mid cap and the small caps had taken it on the chin yesterday, about 0.2% lower. IT space, a big drag, 0.7% of a fall. Metals are moving up in trade, but FMCG are down, 0.3% down. Pharma is down in trade, 0.2% or so. Capital goods index is down, 0.6%. Power stocks are doing better today, 2.2% uptick. Oil and gas has recovered slightly, 0.1% of an uptick. Realty space, slight upticks, 0.12. Nothing very, very convincing coming in. Financial services slightly down in trade. Nifty Bank, of course, we've already discussed. It's down in trade again. Which are the Nifty losers? Bajaj Auto, Cipla, Tech Mahindra, anywhere to the tune of 0.5% to 2%. UPL, Tata Consumers, and Infosys. These are the top drags on the Nifty right now. These are the big losers on the Nifty right now. Which are the top gainers? Reliance Industries, now 1% higher, 29.42 amid the news flow. Coal India and BHEL, of course, this is amid the JV news again. And both these stocks will be in focus. Bharti Airtel, that's the one moving up. Eicher Motors, Tata Steel, L&T. Let's look at these stocks. They are all moving up in trade as among the top Nifty movers at this point in time. So Coal India, RIL, Titan, Hero, Apollo Hospitals, NTPC, L&T, Bajaj Finserv, Divis Laboratories, these are the ones that are moving up, but you still have a large portion of the Nifty stocks that are down in the red. So the advanced decline ratio is skewed towards the declines at this point in time. Which are the top stocks on the brokerage houses radar? So Tata Motors is on top radar. That's reacting downwards today, 0.7% of a decline. UPL is reacting on the downside as well. BHEL is declining 0.3%, but Coal India has shot up. JB to undertake the coal to chemicals business ahead. So that is the one that is reacting positively on Coal India, but negatively on this one, BHEL. So NSE declines include 805 stocks, with the NSE advances at 1,075 at this point in time. So that's as far as the opening is concerned. Let's go across to Sony. Sony, what is it that you spot in the opening trades? How would your opening comments be?
I think it's just wise that we can wait for some time as markets take the dip and, just avoid any sort of opening trade right now. There could be a few stocks that we can just keep on view. One would be Hind Petro. So I think Hind Petro is holding on to its important crucial support of 500. So I think if it's not breaking 500 today, then it can definitely rise up to 520, 525 levels. too soon to say, but I think it's just wise for the markets to settle down at least in the first half an hour before taking any aggressive trades. And also to bear in mind that today is the expiry. So, there could be a lot of volatile swings that can come in the expiry. So, we can just wait for at least some time before taking any aggressive trades in the market.
Okay, big movers in the opening. Hind Rectifier, 6% higher, 718. It's a big move of 38 rupees. KSB, that's moving up sharply. Geo Financial Services, now 3% higher at 318 odd levels currently. Sony, Geo Financial Services, how would you look at this move? Is it a strong move to be chased?
Yes, definitely. Like I just mentioned, 300, 290 is good support. And, giving that dip, you can see one can just accumulate in that dip and keep a stop loss of 290. It should bounce back towards 325, 330.
Okay. Another big move that we are looking at in the opening, Mann Industries, about 4.5% higher, and that's after an order win that the company has reported. Would you track this stock, Sony, Mann Industries?
I think the stock is looking a bit weak on charts for short-term basis. However, if it's able to cross a resistance of 400, 403 for today, then you can see some upside towards 418, 420. But provided it does not cross that resistance, you can see it testing lower levels of 370, 365.
Okay, let's also look at Paytm. It's declining at 3% lower. 393 is the level at which Paytm is reacting. But let's look at PB Fintech. Also, there is news flow over here, which all the investors must track again. Policy Bazaar Insurance Brokers, a fully owned subsidiary of PB Fintech, has received a certificate of registration from IRDAI. This is to authorize it to operate as a composite insurance broker as of February 28. So let's see how PB Fintech is reacting, slightly lower in trade. Would you track this stock at all, Sony, and tell us what this news flow means?
I don't track the stock. I wouldn't be quite aware of that news flow. Only on charts, I can give you a level. It's looking a bit weak, already down by 1% So maybe 1160, 1165 is a resistance for the day. If it's not able to cross that resistance, you can see further downside towards 1100 as well.
Okay, let's look at the debutant of yesterday, Juniper Hotels. Now, you would remember there was a tepid listing gain as against an issue price of 360, just about a 361 rupees premium listing was seen, a flat listing. But towards the end of the session, we did see a move of 11 odd percent. Juniper Hotels is now inching up further higher in trade, 7.5% move, and the stock is now at 431 rupees. For those who have got the allotment, this is an important stock to track right now, but we will not be taking any comment on it because technically there are no historical charts that are available for Juniper Hotels. Let's look at some of the other stocks that you should keep on your radar. Let's talk about Tata Motors, for example. Sony. This is one stock that has not disappointed investors over the last 1.5 years, or it has surprised many on the other side. It has constantly performed and has been constantly hitting all-time high levels as well. Now, CLSA has come out with a report, which is a downgrade from outperform to buy. No, it is from buy to outperform. Now, the target price that CLSA has given is 1,061. They believe JLR has posted 14.5% year-on-year improvement in retail volumes, with UK, EU, and China volumes rising 43%, 12%, 38% respectively, and the volumes are tracking on a higher side. CLSA's downgrade, does that mean anything for Tata Motors investors at this point in time? There's just a slight blip on Tata Motors shares after this brokerage report. On Tata Motors.
Yes. See, Tata Motors, the support is at 900. I believe that, to just buy on the dips or buy around the support of around 930, 920, so that you can keep a plus of 900 and then it can bounce towards 960, 970. Right now, the risk reward ratio may not be quite favorable, although for the day, one can see that 948 is support. Now, if it's breaking 948, then you can be sure that, you can see some further dip towards 930 as well. So it is advisable to buy on those dips for Tata Motors to play a ride, to ride a proper risk reward ratio favorable, and positionally it can even test 980 to 1,000 odd levels.
Okay, Fair enough. So that's as far as Tata Motors is also concerned. Let's look at the broader markets. I think there is some selling pressure that's aggravating on the mid and the small cap space. Mid cap index is now 1% down. Remember, we are just about 10 minutes from the opening trade, and already there's a 1% dip that is coming in. And the small caps are also falling in tow as well. Let's discuss this a little bit more. About 470 points of a decline on the Nifty Midcap 100 index right now. Sony, there was also a report that SEBI has perhaps mentioned in a letter talking about that there is some kind of a froth in the broader markets per se. Now, for SEBI to really talk about something like this, probably it just comes down to the valuations. We all know the way mid and the small caps have rallied in the last 1.5 years or so. 60-70% is no mean joke for the kind of move that we have seen in several spaces. Of course, time and again on our channel as well, we have been mentioning to all our viewers to keep a very cautious eye on the space because of the huge run up that has taken place. But every time we did see some kind of a bounce back and dips that were bought in this space as well. From now, for the small caps, if we talk about, they are 4% down from the peak already. Mid caps also have seen a slide coming in. Again, second day in a row, we are seeing a sharp decline coming in. How would you look at the mid and the small cap space? What would your advice be?
I think definitely a lot of corrections that can be seen in both these spaces. It just makes sense to shift your positions, in the portfolio to large cap stocks. If we just have to make the comparison, obviously, there was a lot of inflated rally that we'd seen in mid cap and small cap, and it was just, it just makes sense that, the correction can happen in one way or another. So, the levels that can be justified for one to re-enter the longs for specified stocks, which can still perform well. It can give you that sort of a base. So right now the advice would be to just stick to large caps. If you look at the large caps, yesterday's fall, some large cap stocks were leading, such as your TCS, Infosys, and ICICI Bank. So I think these are some of the stocks which can look good ahead going forward. So I think it just makes sense to shift the portfolio to large cap stocks and stick there for a quarter or so until the mid cap and small cap spaces have shown you that base and can bounce back again.
Okay, so that's as far as the mid and the small cap strategy is also concerned. Let's discuss some more brokerage reports. Citi has come out with a report on the PSU banking space. There is a buy on BOB that they give with a target price of 290. They have a sell on both SBI and PNB. For SBI, they have a target price of 600. For PNB, they have a target price of 83. On the other hand, Kotak Institutional Equities on SBI has given a buy rating where they have raised the target price from 760 to 850. And they do believe that the outperformance is likely along with other public banks as well. Now, this is again one space that has really outperformed and given investors enough joy over the last 6 to 8 months or so, Sony. Would you still stick your neck out and talk about some of the stocks that could be bought at the current levels despite the kind of rally we have seen in the PSU banks?
I think there are a lot of stocks that can still outperform. Canara Bank, SBI, Bank of Baroda, they look good, but of course on buy on dip. Now, if you talk about SBI has a very strong support of 700. Now, as long as 700 is not breaking, it will be, difficult to say that you can see a sizable correction in this particular stock. So I think buy on dips towards the support of 700 makes a better sense. Similarly, for Canara Bank, 500, 520 is a very strong support. We've seen the stock definitely outperforming recently. So as long as you get the dip somewhere around 530, one can reinitiate the longs, keeping a stop loss of 500, and then again it can bounce towards 580. I think all these stocks, they formed a structure of buy on dips. Of course, how the entire space has outperformed, and there is a bit of a movement or diversification that can be seen currently from the PSU space to the private space. Like I just mentioned, ICICI Bank to be one of those stocks. However, these two stocks still look good as a buy on dips.
Okay, this still looks like a buy on dip space. All right. Anything else that strikes you that you may have caught in the last 15 minutes or so? Any particular strong move on the charts?
So HDFC Life is a stock that is looking good. I think it has almost bottomed out somewhere around 560. It has it's sort of consolidating now between these levels, 570, 560 as a lower end of the range. On the higher side, you can see 590 to 600 as a higher side. So maybe going into March series, if the stock is able to take out the resistance of 600, you can see a sizable upside towards 630, 650 levels. This is a good stock to keep a watch out for the March series.
Okay, fair enough. So HDFC Life, we will keep an eye out into as well. Let's talk about some more brokerage houses reports that are coming out. On ITC, there is a Goldman Sachs report. So let's talk about that now. There's a buy rating from Goldman Sachs on ITC, target price of 480. They believe that weak near-term earnings and overhang of bad stake sale are key drivers for the stock correction. And ITC's cigarette business is trading at an implied FY26 PE of 15 times. They also expect cigarette volumes to recover in fourth quarter, and the EBIT is expected to grow at an 8% CAGR. Paper business recovery is likely only in the second half of FY25. That's the kind of report that's coming in. Currently, the stock is hovering near 409 odd levels. There has been a past stupendous rally that we have to refer to, and then a long form time of consolidation that has taken place on ITC. Thereafter, there are hopes that FY25 will have more triggers coming in. Basis this, how would you really play the ITC stock right now, Soni?
ITC is also in a sideways trend. 400 seems to be a support. It has not broken. Even in the market's volatile movement, we've not seen it, ITC breaking the level of 400. However, the resistance stands strong, anywhere between 415 to 420 level. I think I should only look at the stock if it's able to cross 420, then we can comfortably say that, a near-term bottoming has been done, and perhaps it can bounce back towards 440, 450 odd levels. So it's a wait and watch, list for the particular stock for some time.
Okay, so that's the view coming in on ITC as well. So the Sensex is again moved up in trade right now. There is some volatility. Let's get back to the markets and let's see how the markets are trading at. The Nifty Bank still lower, about 50 points, 60 points odd or so. But let's talk about the kind of moves that we are looking at again. Some kind of volatility coming in on the Nifty again. We can spot there is a kind of a move at 29,950 odd levels. You can again see the Nifty absolutely flat at this point in time. It's the broader markets that are taking it on the chin for the second day in a row as well. Let's look at some of the stocks then. Which are the stocks that you need to watch out for? On the F&O gainers front, let's look at the F&O space. Hero MotoCorp, Delta Corp, Alchem Laboratories, these are the stocks that are moving anywhere between 0.7% to about 1% odd or so. On the downside, you have ICICI Lombard, BEL, you have Z Entertainment, you have AB Fashion, Voltas, BHEL. These are the stocks that are dragging. Crompton, PI Industries, Indus Towers. These are the stocks that are losing as far as the F&O space is concerned. Anything in the F&O space that catches your attention, Soni, that you would be looking at in the current setup?
Definitely. MFSL. So MFSL has seen the highest rollovers as of now. And, just let us also remember that today's day is still pending. So I think it has already crossed 94% of rollovers on the long side. And the stock has comparatively underperformed when it comes to the rest of its peers in the same sector. I think so MFSL, considering that it has underperformed and very high rollovers are taking place on the longer side, it is poised to test 1,000, 1,020 odd levels. And if it's able to cross that level, maybe in the next series, it can definitely head towards, 1,080, 1,100 as well. So I think it's a good stock, good support levels, 910, 920 is a good support. However, for short term, one can look at a support of 940. So as long as 940 is holding, it can definitely try to test first 11,000 odd levels. Above that only you can see some sustenance and soaring higher towards 1,080, 1,100.
Okay, fair enough. Point well taken on this one as well. Let's again check on the stocks that were mentioned by Soni as her top picks. Samvardhan Motherson at around 118.4 is improving from the losses in the early trading action, and PVR Inox are sticking higher in trade as well. Both of these stocks need to keep an eye out on. So of course, Samvardhan has pulled up from the lows of the day, and PVR Inox is also now pulling up 0.4% higher, 1369. These are the two stocks that have been mentioned by Sony, just as a reminder to all our viewers right now. However, let's look at the broader markets again and look at some of the stocks that are actually doing better, even in a lower kind of trajectory that the mid caps are falling in. SML Isuzu, 0.8% higher, EID Perry, 0.8% up, GSFC, that's up in trade as well to the tune of 0.8%. On the downside, you have ABAN Offshore, 4% down. We have JB Chemicals and Pharma, 3% down. We have Bajaj Telefilms that are down in the trade as well, about 2.5% odd or so, kind of a fall can be seen on the mid caps. These are the stocks that are moving on the downside in the mid cap space as well. But Sony, to ask you specifically, is there any particular sector that you believe is all set to show us that is going to see some sectoral rotation flows coming in? Because all through this year, we've actually seen turn by turn several sectors really pull up in trade and take their turns to attract all the flows. Is there any sector which is on the verge of taking that lead now?
So this sector would be pharma. I think pharma space, we've seen very high rollovers happening. And of course, it's a counter which has been, given the title of a defensive counter in the past. But of late, we've seen pharma also acting as an aggressive sector whenever there is a dire need for the markets to show some sectors come out. And individually also, some of the stocks, they've seen good rollovers such as Torrent Pharma, Zydus Life, Glenmark Pharma, very high rollovers. But I think the stock that can stand out from this particular sector would be Zydus Life. It's a very strong moves that we've seen Zydus Life, like month on month wise, continuous uptrend. We've seen it has broken multiple resistances in February series alone, which was 800, 900, and then again it's continuing above 900. Even in yesterday's fall, it held on to 925 as its low, never broke below it. Today also 925 was a low. It's just trying to bounce back from those levels. I think short-term basis 925, 920 as a good support. Just keep that as a stop loss. You can ride it till 950. Any move above 950, 960, you can see it testing 1,000 levels. I think one stock that can clearly outperform the space and the markets also as of now.
Zydus Life. Let's keep an eye out on Zydus Life. There have been some strong moves last few weeks on this one as well, and there is enough scope for it to move higher, as Sony believes. If you look at Zydus Life last 1 month data, 23% of an upside has already been seen. Over the last 6 months, there's a 50% surge on Zydus Life that we have already seen. And in the last 1 year, the stock has nearly doubled investors' wealth. 98% of an increase is what you have seen, currently hovering at 936. So strong buy coming in from the pharma pack as far as Sony is concerned. That's the vote of confidence on Zydus Life that we see. Let's again look at some of the sectors. There is a mixed trade. It's the media stocks that are showing some decline. You have healthcare, you have consumer durables, pharma, FMCG, IT, that's showing some slight declines. On the upside, you have autos that are driving slightly faster. Metals that have improved from yesterday's losses a bit, 0.4% of an uptick can be seen. Oil and gas has slightly recovered as well. Let's talk commodities now, Sony. Oil and gas, energy stocks. How would you really look at this particular space? Of course, this also has had its share of a dream run. Beat the upstream majors, the likes of ONGC, Oil India, the refiners, MRPL, Chennai Petro. These are the stocks that have actually performed out of the blue. Even the OMCs, HPCL, BPCL, IOC, there is a kind of re-rating that has really taken place on all of them. Then, the energy basket from like Coal India is a stock that has been an outperformer. How do you look at this entire basket and tell us where do investors go from here? Those who have missed the kind of rally that we've seen here, is it too late to get into the space?
I think the space has a lot of momentum still left, and you could see maybe another quarter or so where you see the stock, the entire sector performing quite well. Any buy on dip strategy is working well for these stocks. Multiple stocks like NTPC, Coal India, you can just see any dip that they come towards any of its support levels, and quickly it's a good buy from those levels. They've definitely performed quite well. So I think one can just continue to hold for another quarter or so. The stock looks quite good on charts as well as derivatives data point of view, both oil and gas, power, energy sector.
Okay, fair enough. Apart from this, on the metals pack, Sony, how would you really track the move here? Even here, we've seen a lot of news flow now come in on Vedanta. Results came out. This space has been buzzing. We've seen strong moves on Tata Steel, JSW Steel, Nalco, several PSU stocks as well, like SEAL. They have moved up in the past. Any fresh moves that need to be tracked from the metals pack now?
Metals, we can see they have good base. However, they also fail to continuously take out their resistances. Like even if I put individual stocks in the picture, Tata Steel 145 very strong resistance. On the downside 135 good support. It's just consolidating. I think it's just both ways, a lot of sideways movement. Individual stocks, even if I look at General Steel and Power, JSW Steel, they're all in the consolidation range. So not that grand breakout that can be seen on charts or on any sort of derivatives data point. Maybe it just needs to add up a bit more data in the coming month or so, so that we can have a confirmed view and say that metals can lead the markets from here on also. So that conviction is not just come till now. I think we just need to wait and just have more patience and just wait for the sector to see that sort of outperformance coming in.
Okay, so that's the metals pack. But let's talk about the auto space that's been driving in the faster lane. Remember, tomorrow is when we get the auto sales data. So be it stocks like Maruti Suzuki, that's up by 0.8% at 11,244 odd levels, or be it stocks from the two-wheelers basket like TVS Motors or Hero Motors, they are also moving up about a percent odd or so, can be seen on the move on TVS. So that's 21.23 for that one. 4,417 for Hero Moto. That's again up a percent in trade today. M&M is moving up half a percent higher. Eicher Motors is also up in trade. Some of these stocks are buzzing. How would you look at the auto space now, Sony, ahead of the kind of sales data that we will be looking at now tomorrow?
I think auto space, not all these stocks are looking quite strong. Maruti is strong. Definitely Maruti is a good buy on dips. 11,100, 11,000 very strong support. Just look forward to buy on those dips. And it should bounce back towards 11,400. The other stock can be M&M. M&M has significantly outperformed the entire month, and we've seen very good highs of 1950 odd levels. So as long as you get any sort of dip towards 1890, 1900 odd levels, one can just re-enter those dips. 1850 good stop loss, and then again see 1950, 2000 odd levels coming in. Talking about Bajaj Auto can be a bit of an avoid from current levels because it has already run up a lot and it has tested those 8,000 plus levels. Obviously from a short-term perspective, I would prefer that, some more dip can be seen towards 7,800 for one to reinitiate the longs. So I think this stock has just done its chance. The other stock that one can look at a level would be Hero Motors. I think Hero Motors, just wait and watch. If it's able to cross 4,500 on a closing basis, then only one can look to reinitiate some longs for a short-term perspective towards 4,800 to 4,900.
Okay, fair enough. So those are the stock ideas coming in from Sony on the auto space as well. Well, with that, thanks a lot, Sony, for being with us on this special edition and sharing with us all those stock ideas and helping us navigate through the markets as well. It is the expiry day and it is Thursday. It is February 29. A very, very, unique kind of proposition that we are looking at. Any different plans for the day, Sony, on February 29, the leap year day?
And no plans at all. And thank you for highlighting, though. It had just, I've taken it out of my mind that this would be that significant. I mean, obviously aware of that it's a leap year, but then again, to have this sort of a expiry day again is like, it's quite unique to understand. So I think I just, maybe next time I can plan something.
Okay. Well, all the best to you, Sony. Thanks a lot for being with us on this very special edition and sharing with us all your specific stock ideas as well. Meanwhile, viewers, let's start winding down the markets and the session again. So right now, if you look at the Nifty, it's absolutely flat. There is nothing happening on the major index. 21,950 right now. It is just hovering near that flat line. The Nifty Bank, meanwhile, 0.2% lower in trade. 45,846 can be seen on that one. Let's look at the sectoral move then. Let's start off with the mid and the small caps. Both are down in trade. That's where exactly the pain is inching. Only the cooling off factor is that India VIX is slightly cooled off from yesterday's spike, 1.5% downtick at 16.08. We can take some solace from that one. And apart from this, autos are doing better, 0.3% higher in trade. Financial services, there are some gains. Metals shining brighter, 0.4% of an uptick. You can also see PSU banks that are doing better in trade. Real estate stocks have come back after yesterday's sharp decline that we actually saw. Oil and gas also seeing some upticks come in. Where is the pain point? Apart from the broader markets, the healthcare stocks, the hospital stocks is where the pain is emerging. Pharma stocks down in trade, 2% down. Media stocks, of course, amid this huge news flow is leading to some kind of cuts coming in. You have the IT pack that was doing better yesterday is coming under pressure, 0.2% lower. FMCG, 0.2% lower in trade, and absolute flattish trade on Nifty Bank and financial services and thereabouts as well. Let's talk about the Nifty then and see which are the top stocks moving up the markets today on the Nifty. The top gainers include stocks like Reliance Industries, 1% higher. That's the one that you have to give all the credit to right now, which is holding up the Nifty at the flat level. Barring the Reliance Industries, it could have been a deeper decline in the Nifty. Maruti, Titan, M&M, Hero MotoCorp, Wipro, Bharti Airtel, ITC. These are the other movers as far as the Nifty top moves are also concerned. On the downside, let's look at the Nifty losers now, the stocks that are not doing well on the Nifty. So you do have a whole host of stocks that are actually not doing well as far as the Nifty is concerned. Of course, a lot of stocks coming in from the financial services space. Those will be the ones that will not be doing well at this point in time. So you have the Nifty now absolute flat at 21,954 odd levels. ABAN Offshore, JB Chemicals, Tata Invest, these are the stocks that are declining in trade. You have Bajaj Auto that's falling. Cipla, Power Grid, Apollo Hospitals. These are the stocks that are dragging the Nifty right now in trade. Midcaps is where the pain point is. What we will do is we'll wind down the session right here. Let's also talk about one more stock before we wind down, and that is GPT Healthcare from the primary markets. Remember, this stock is also going to be making its debut today, and in the pre-opening trade, this stock has settled at 215 on the NSE. That is about 15-16% premium to the issue price of 186 rupees per share. So if in case you had applied for GPT Healthcare, today is the listing, and in 10 minutes or so you will see the listing. Right now the pre-opening levels indicate a 16% premium listing for GPT Healthcare. We'll keep an eye out on that too, and you will get to know all the moves on the markets on Business Today television. So don't go anywhere and stay with us. Many thanks for joining us on this special edition.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching BTTV. I'm Tanya Neja. Well, the stock on our radar today is Wipro, and the stock is in focus today because Kotak Institutional Equities has downgraded Wipro stock to sell from reduce.